We have a pretty big issue there, and we have an existential problem facing us, which is climate change. And part of the policy response to climate change is to subsidize industry, right? To spend money on new technologies. And at the same time, while we have that imperative, we have very high rates of inflation, disruptions in the supply chain, et cetera. So we're in a situation where, although the dollar is very strong relative to other currencies right now, it's almost at parity with the euro, we're in a situation where we print money, and the money we print is only based on our promise to pay it back. And that the value of that money comes from the fact that we issue bonds and we pay the interest holders the interest on those bonds. And that's something we'll probably continue doing long into the future. But it also allows, if you're president and Congress, et cetera, political establishment, to spend somewhat irresponsibly. Some may think the Iraq War was irresponsible spending, right? Some may think that massive stimulus, albeit necessary, will in the long term be very destructive for the economy because we'll have to pay it back at high interest rates. But that's something that, as the United States, as the full faith and credit of the United States, it means a lot. We can issue a currency based on our ability to pay it back. With the emerging Bitcoin currency, where I could have my phone here and Andrew could have his phone there, and through a secure blockchain, I could send him payment without a middleman. A bunch of computers would do a lot of work to create cryptography to make that transaction between one anonymous wallet and another anonymous wallet go through and post on a general ledger that everybody can see. That's likely the future of money because we tend to move toward the most efficient means of exchange possible. And if we switch to a form of money like that, where with Bitcoins, there will only ever be 21 million Bitcoin, there would be no ability for governments to take policy imperatives like fighting climate change or fighting a war, and for that reason print a bunch of money. The fundamental nature of money would change. And it's kind of inevitable that it will happen away with, at least with blockchain technology, supply chains, everything from your grocery store experience, scanning a barcode and figuring out where everything in that box of cereal has been through blockchain technology, or carbon offset verification in 10 years, all being on the blockchain. IBM distributing COVID vaccines in the developing world using blockchain to manage the supply chain. So we're headed to a world where we're all going to interact with Web3 and decentralized apps the same way we interact with Web2 right now. And part of the future is obviously, the dollar. There's still going to be a major role for the dollar, but cryptocurrencies, a lot of them are scams, Dogecoin, et cetera, but legitimate cryptocurrencies are going to be a big part of life going forward. So is blockchain technology. And right now, it's a major problem that so much dirty energy is used for Bitcoin mining. However, that proof of work mechanism for Bitcoin is necessary, and there are ways to mine Bitcoin without adding dirty fossil fuels to the mix. So, Andrew, we had a very interesting adventure together here learning about blockchain. Andrew went to the Blockchain Summit in Miami and Washington, D.C., learned a ton about Bitcoin, and he's here to tell you what he learned, and I guess what we learned together, because this was a really fun collaboration. We had a great time doing this together. And Andrew, you're up there.
Thank you, Corey. That was a wonderful intro. Let's see. Hello, everyone. My name is Andrew Lepage, and my Capstone project pertains to Bitcoin mining energy use and future policy. So we're going to talk a little bit of background on Bitcoin. Corey gave you a little bit already. I'm going to add on to that. We're going to talk about Bitcoin in America and the current political landscape involving Bitcoin. So starting with the background, basically it's all over the news nowadays. You pull up your cell phone now, look at the news, you're going to find a bunch of articles on Bitcoin. There's a lot of conflicting information, which is a problem, just because there's not a lot of peer-reviewed research. It's basically whatever everybody's printing. So that creates a lot of fear, uncertainty, and doubt, or FUD, as people like to say. The thing is, one thing people can agree on is that Bitcoin does indeed use a lot of energy in its mining mechanism. So I went to a couple conferences, spoke to a lot of stakeholders, and filtered through all the research that I could to kind of learn more about Bitcoin's energy use. So a quick background of what Bitcoin is for those who don't know. It is a digital cryptocurrency that allows for these peer-to-peer transactions without the use of an intermediary like a bank. Basically, all these transactions could be stored in these digital blocks, and all these digital blocks with these transactions can be linked together in a blockchain. A bunch of computers basically linked to the Bitcoin network all around the world are mining Bitcoin, which basically means they're verifying all of these transactions through Bitcoin's proof of work method. All these computers verifying all of this information uses a lot of energy. The reason people do this is because in Bitcoin's algorithm, you're rewarded Bitcoin for this work. There's other mechanisms out there, such as proof of stake, which a lot of other cryptocurrencies use, but a lot of people believe in Bitcoin's proof of work security method. Corey already spoke a little bit about Bitcoin and blockchain utility, so I'll just add on to that. Basically, you can use Bitcoin cross borders without the heavy fees you'll have with transferring money via banks, for example, or Western Union. A lot of people are having financial inclusivity in a lot of countries where they probably wouldn't. Countries in South America, Central America, and Africa, for example, because all you need is a smartphone, and you could already start trading crypto. A little bit more on its utility. These were just some articles I pulled from the last 3 months that just kind of shows how our understanding of Bitcoin is still evolving, and cryptocurrencies in general, as well as blockchain. It was used at the onset of the Ukraine war to send money quickly from a lot of different sources and to get donations over there without these like heavy fees. It's been used to track down criminals through that blockchain mechanism, because basically you can go back and look and see where these transactions have occurred. Corey mentioned a little bit about carbon offsets. Blockchain technology allows some transparency and traceability, so you can kind of see where they're going. And if you just want to avoid a bank, you can use Bitcoin. So a little bit more about mining. Basically, people running all of these computers to verify all these transactions. There's a lot of facilities set up by these Bitcoin mining companies, and basically it's all these computers on shelves running the Bitcoin algorithm, verifying all these transactions, and providing that security in this cryptocurrency exchange. These computers can also be stacked pretty tightly in shipping containers, which kind of makes Bitcoin miners very mobile. They can get to a lot of places where other people can't, and take advantage of some energy sources. So to speak to Bitcoin's energy use, they're looking at about 119 terawatt hours a year. And that's just a number to a lot of us, but that's about what the country of Argentina uses in a year. So quite a lot of energy. And over the last few years, Bitcoin's energy use has been increasing. This map kind of shows where most Bitcoin mining was taking place around the world percentage-wise. So in May of 2021, most Bitcoin mining was done in China. And that's because there was a lot of cheap hydro and cheap coal available. And Bitcoin miners want cheap energy because when they get that Bitcoin as a reward, they want the cheapest energy possible so it doesn't cut into their profit margin. But then in June of last year, so just about a year ago, China began to crack down on Bitcoin, and miners went elsewhere. And since Bitcoin miners are kind of like little kids chasing a soccer ball, that's their cheap energy, basically. They're chasing cheap energy like little kids chasing a soccer ball. And currently, most miners are actually in the States. So that brings us to the next part of the presentation. And a lot of Bitcoin miners came to America, and that was to take advantage of cheap curtailed renewable energy and also more secure property rights here. The first pie chart kind of shows which states are kind of leading in Bitcoin mining, where most of it's taking place. A lot of it's in Georgia to take advantage of nuclear power and solar. And the bottom map just kind of shows different resources around the states that Bitcoin miners are tapping into. A lot we're tapping into hydropower in Washington and New York. Unfortunately, a lot of coal in Kentucky. And all these states are basically vying for Bitcoin miners, luring them over because you have a lot of rural counties that aren't getting any tax revenue. So by giving tax breaks, these politicians incentivize these Bitcoin miners to come. They could sell them energy and also provide a little bit of tax revenue. But the problem is a lot of these states are mining Bitcoin with coal. Kentucky being a big one, Pennsylvania, Montana, it's going on in quite a few places. And they're kind of reviving some of these coal plants that have been dying out. There's currently a Supreme Court case that's kind of pending. It should come out this month or next month. That's basically going to decide the power of the EPA to regulate emissions from power plants, which could kind of have an effect on Bitcoin miners. But with the conservative court, we'll see how that goes. There's also a new kind of interest just over the last few years. Bitcoin miners are able to tap into flared gas. And so what that is when people are drilling for oil, they hit these pockets of natural gas. And if you're not near a pipeline or some storage system, you basically just vent out this gas. And the reason they light it on fire is to burn out the methane that's in that gas, because methane's 25 times as potent as CO2 at trapping heat in the atmosphere. So they light it on fire to burn off that methane, but the problem is they're still emitting hundreds of millions of tons of CO2 into the atmosphere. And that map kind of shows it's going on all around the world. And all that energy, if you could tap it, is about 1,800 terawatt hours, which could power the whole Bitcoin network 15 times over. But you can't easily get to all of that. But Bitcoin miners can get to more places than a lot of people can. And one study came out that said that these Bitcoin miners can reduce CO2-related emissions 63% compared to just flaring that gas. So there is some potential here. It's kind of weird to talk about Bitcoin being good using fossil fuels, but this is a case where it can reduce some emissions that are just being emitted anyways and wasted. The problem with that 63% number, though, it does come from a Bitcoin mining company, and that's why we need a lot more peer-reviewed research in all of this to try and get more numbers without maybe some bias. Ideally, we'd like to see Bitcoin being mined with renewables, and we are seeing some of that. And the way this is occurring is you have a lot of these like solar and wind resources, for example, in West Texas in the middle of nowhere, where Bitcoin miners can easily co-locate with them and basically start monetizing some of that energy, basically giving a return on investment for these renewable energy investors. A study just came out of Berkeley that kind of showed that there's a problem with renewable energy investors wanting to build facilities, but then lag time between permits and construction trying to tap into the grid. So because a lot of this renewable energy is in the middle of nowhere, it takes time to connect that energy to the grid. Whereas Bitcoin miners co-locating with them are able to buy that energy right away and give some return on investment for renewable energy investors. In California, California curtails 1.5 terawatt hours of solar and wind. So basically, certain times of the year, there's a lot of solar being produced, like in the middle of the day, and there's not a lot of demand. And if there's no storage, basically this energy is just stranded and wasted. But Bitcoin miners can easily move there this time of year, tap into that energy, buy it for even just pennies on the dollar, like 3 cents a kilowatt hour, which is really cheap. For energy, it could generate tens of millions of dollars. In Texas, we're seeing actually renewable energy being built because if we all remember what happened in Texas last year in that freeze, basically there wasn't enough energy. There was a huge demand with people powering heaters in their homes. So demand spiked, prices skyrocketed, There were blackouts, and people even died. So Texas kind of created these policies, tax breaks, to bring Bitcoin investors in, and they've actually invested in building renewable energy facilities. And then usually the question is, if all of this energy is going to Bitcoin mining, what's the point? Texas has also created policies that when there's a high demand, like in that freeze, or more recently a heat wave, Bitcoin miners are incentivized through policies to shut down. So basically, they're not taking any energy in, and they're letting that energy go directly to the grid. And that creates kind of a demand response. Currently, although Bitcoin's been around for 10 plus years, the federal government really is only just starting to look at it. Biden signed an executive order in March asking the federal government to look into the responsible development of digital assets like Bitcoin. So it's still all pretty new. I went to DC where there was a few senators speaking about it, and there's currently 42 pieces of legislation about Bitcoin or about digital assets, but mostly they pertain to financial regulations. There's not a lot of environmental speak about it yet. States are kind of deciding that on their own. So some recommendations is there definitely needs to be a lot more peer-reviewed research. There's not a lot out there at all. It was very hard to find a lot of this information. You're kind of peeling through news articles a lot of the time. And even some of the peer-reviewed research is questionable. So we definitely need more of that. We need to educate policymakers and kind of try and embrace this evolving technology because it does have a lot of potential. But we should be cautious with flared gas mining for Bitcoin, for example, because although it is a wasted resource, there's kind of concern that instead of developing infrastructure to tap into that gas, that will just create incentives for Bitcoin miners just to go use it, and fossil fuel companies can just find another source of revenue. So we would like to promote building more renewables, kind of like what's going on in Texas. So in conclusion, I mean, when I started this project, it was very confusing. Bitcoin mining used a lot of energy, and a lot of the information out there was basically bad. But it's a lot more nuanced than that, because it does use a lot of energy, but it doesn't necessarily equate to a lot of carbon emissions. Bitcoin uses as much as 70% renewable energy in mining Bitcoin, but that study, once again, was from a Bitcoin mining company. But from Cambridge, they came out with about 40% of Bitcoin mining is renewable, which is twice as much as the US electrical grid, or twice as much as the sources in the US. So a lot of questions remain. It really needs to be researched more. It's kind of a taboo subject in academia, I feel like. But there are obvious advantages to this technology, and if we can harness its potential, it gets a little bit closer to solving the jigsaw puzzle that is climate change. And with that, thank you very much. Acknowledgements to Corey, Margot Pai is on my committee, the cohort, Miss Julia Brown, who I have not met in person yet, Katie Irving, family, friends, stakeholders, administrators, and everyone I spoke to that helped. And thank you.
Sorry for the pause. I was blanking on.
No worries. I was expecting one from you.
Yeah. Well, we chatted about this a
Yeah.
little while ago. So how much of this? So I sort of have two questions. One is, how much is internet connection speed an issue for these people? It sounds like since these are in containers that you could just go, to follow the energy.
Yeah.
But where in these remote locations there isn't necessarily fast internet. Satellite is going to be accessible, but that's not. There's a huge lag time there. And in financial markets, everyone tries to get as close to the exchange as possible. And I know my understanding of the crypto space is that the people who are doing the proof of work calculations are sort of competing with one another in that space to get the calculation and their proof in first to claim the reward. How much of the speed is a factor there?
So that's a really good question, and one I actually looked at, because yeah, it's a lot of remote locations, but it's not that important. You don't need a super strong connection. Some connection to the internet you do need, but if you can get that through satellite, for example, like you mentioned, it's doable.
For my second question, the talk speaks specifically about Bitcoin. Is this sort of concept applicable to the broader crypto market? Because NFTs and all this other Ethereum are all different variations of sort of this theme. Does it apply across the board, or were you specifically looking at Bitcoin?
It's a very good question. I specifically looked at Bitcoin because of its proof of work method. So that uses a lot of energy, more so than proof of stake. So because Bitcoin uses proof of work, a lot more energy, and that's what kind of makes it a little bit more synergistic with energy resources. Yes.
Do the Bitcoin miners pay taxes on the income that they get when they solve it first?
It depends on which state you're in. There's all different tax policies and incentives. So I guess the concern is a lot of so-called red states are kind of bringing Bitcoin in, and they may not use the greenest or cleanest sources of energy. So it's kind of the hope that bluer states, so to speak, someone like California takes advantage and brings them in, but it's hard with creating these policies. Like New York, I think it was just today, they kind of approved this ban on proof of work methods that don't use green energy, which could be a good thing, but these miners may just move on down to Kentucky, for example.
Thank you.
Okay, cool. Thank you.